More great music there from Lance. We know when Gerard Gibert is on, you got to bring the good bumper music.
You got to bring the heat, man.
That's right. You got to have that fire ready. So with us in studio is Gerard Gibert, the host of Middays with Gerard. Thanks for being here.
Hey, Lucian. Thanks for having me on.
Gerard wrote, we were talking about this in the 6 o'clock hour in particular, just a fantastic analysis that you can find on supertalk.fm of House Bill 1. So thanks for taking the time to walk through a little with us that article, what you've done, and sort of what you're seeing on the tax front.
Yeah, so this bill, of course, would eventually phase out the state income tax. It's no secret that this has been a priority of Governor Tate Reeves, honestly, for quite some time. He mentioned it repeatedly during the campaign, and he has been promoting elimination of the income tax this session. But Speaker of the House Jason White also is a huge proponent of this legislation, of this move. And in fact, so much so that he styled the bill HB1,
right,
labeled it HB1. And
that's a clear message.
That does. You know, that's something that is used more regularly in Washington than it is at the state level. The Democrats' HB1, for example, when Nancy Pelosi was at the helm in the House, was to completely revamp and federalize voting in this country.
Oh, that's right.
That was their HB1.
I had forgotten about that.
Yeah.
Blocked it out.
Exactly. But here back in Mississippi, HB1, that is sweeping legislation that has a number of key provisions in it, with the, I guess the primary one being a phase out of the state's income tax over a few years down to a rate of 0. There are 9 other states that do not levy an income tax. You hear people talking about that all the time. Florida, Texas, Tennessee, sort of near us. And so I think the governor and the speaker, at least, want to accomplish the same here in Mississippi. Now, when you get into taxes, as you know, Lucian, it's complicated.
It gets complicated quick.
It's nuanced. Even though I built my professional career in the information technology industry, my degrees are in accounting with also an emphasis on economics, and I leaned into taxes. And taxes really, conceptually, haven't changed a great deal since I was taking the 1980 tax course. I mean, there's some the way we calculate taxes, but the structure and the framework, pretty much the same.
Pretty much the same. That's interesting.
So I was able to rely on just some of that experience and some of that knowledge. I also was involved early on in design and implementation of automated tax processing systems, something that you can go to the web today on TurboTax and do for nothing. But back 40 years ago, that was pretty revolutionary.
I bet.
Yeah. So bottom line is we have a bill here that
walk us through a little bit, Gerard, what HB1 would do.
Yeah. So first and foremost, it would phase out the individual income tax. Now, something to keep in mind is we already passed a bill a couple of years ago, 2022 specifically, that eliminated the 4% bracket in the state of Mississippi, and then we're in the process of phasing out, or down really is the more appropriate way to describe it, the remaining 5% bracket, all taxable income greater than $10,000, down to 4%. So the rate applied, when folks are getting their paperwork together right now for the 2024 tax year, we'll be filing our 2024 taxes, the rate applied to your taxable income in 24, 4.7%. The rate applied in 2025, 4.4%. The rate applied in 26, 4%, and that's where it stops under the current legislation. That's law. But what's happening is with this particular bill, HB1, it would take the 4% rate down to 3%. That's a 25% decrease in 27, tax year, calendar year 27. Then it phases it out in 0.3% increments over 10 years to a terminal rate of 0 in 2037.
But it's a 10-year process to get there. It's a
10-year process. Okay. But something to keep in mind that I point out in the article is, let's look at 24. I mean, folks are accustomed to what they paid in 24. They're looking at their paychecks. They're doing their tax returns. Going from 4.7 in 24 to 3 in 27.
pretty
is
big.
a 36% decrease in the income tax.
That's something.
That's significant.
And is that HB1 or is that existing law?
That existing law takes it from 5 to 4, which is a little less than, it's 20%. That's existing law. But if you go ahead and tack on the decrease to 3% under HB1 and 27, that's a full decrease of 36%, 24 to 27.
Okay.
So that's the primary aspect of the bill. And then the other is, okay, well, how do we pay for this? Because income taxes generate, individual income taxes, about $2.2 billion of revenue. And you noticed in the article, I put together a couple of real simple pie charts that show here's how we get our revenue and here's how we spend our money. And you see in the pie chart, it's sales taxes, that's about 38%. It's individual income taxes, that's what, 28%, I believe. 28%. So it's $2.2 billion. So how do we cover the fact that we're going to eliminate that revenue? Well, one of the first things, or one of the primary ways to do that, is to end the diversion on sales taxes to cities. So under present law, you go to the store and you buy something with the state 7% sales tax, 18.5% of that sales tax remitted to the state by the retailer gets diverted back to municipalities where the transaction occurred. That's
even though it's a state sales tax, it's going back. Okay.
And there's some other diversions as well. The state keeps roughly about 30%, and that's the primary source of income. Just above about 10 percentage points, the income tax. So what the bill says is we're not going to divert to the cities anymore. So the cities then have this big hole in their revenue. It's about $700 million a year, by the way, that goes back to the cities. So how do we account for that? So that this bill would impose a new 1.5% sales tax layered on the 7 for a total of 8.5, but cities, and in this particular case, counties as well, which currently do not receive diversions, would keep the full 1.5% layered on tax.
And is that an option for the cities and counties, or is this automatic? I mean, could a county say, or a city say, we're not going to impose that 1.5, or is that an automatic function?
Great question. It is automatic, but the city and county governments may opt out.
Okay.
The bill does provide them the ability to do that. I can't see a single one of them doing that because they wouldn't have enough money to run the city and the county.
I think that's right.
That's the bottom line. So that's the other big provision. And then there's an increase in the sales tax on non-grocery items. We talked about that. That would be the 1.5%. And the reason I distinguish it from grocery is because there's a decrease on the groceries. Those goods that qualify for SNAP benefits, food stamps, those would be taxed at the lower sales tax rate. So hang with me here. You got a phasing out of the income tax. You got an increase of 1.5% on all non-grocery purchases, and you got a decrease on grocery purchases from a sales tax perspective.
And now, what all falls into that category of groceries? I mean, are we talking about hot food, or is this
not, generally speaking, non-prepared food is how it's defined. So when you go to the grocery store, like most people do, you may buy, for example, household products, paper goods, things like that. Those don't qualify. When you're checking out, only the non-prepared foods. And by the way, these are rules promulgated by the federal government because they're the ones who generally sponsor the SNAP program. And I think our lawmakers were wise in saying, okay, if it qualifies for SNAP, it qualifies for the lower grocery sales tax rate. In some states like Florida, where they have a lower grocery tax, Rhino and I pulled this up a couple of weeks ago, there's like 5 pages of lists of stuff that how it gets taxed. That
Interesting.
I mean, like baked goods, and it gets into all these categories. It just hurts your head. I don't know how they program the dang tax systems.
Yeah, good for the IT
system.
people, I imagine.
That's exactly right. So the 3 major components we just talked about, phasing out the income tax, increasing non-grocery sales taxes, reducing grocery sales taxes. The final and fourth major provision is to implement a new 5% sales tax on fuel purchases.
Okay.
So presently, Mississippians pay 18.4 cents per gallon of excise taxes. An excise tax is a levy on a quantity as opposed to a percentage of the price. This adds a sales tax of 5% to your purchase. So you buy $100 of gas, you're going to pay $5 sales tax.
Does that mean you're effectively paying a tax on a tax then?
Somewhat, yes. Okay. Yes, and I can't explain. I've not gotten a concrete answer from the architects of this legislation, mainly Representative Trey Lamar, why they chose a sales tax as opposed to excise. Now, some states have both, such as California.
I'm shocked.
They've got both now. I know you're shocked. And it's like 61 cent excise tax.
Hey, can you stick with us for the final segment?
You bet.
Stick around. We'll have more with Gerard Gibert talking about HB1, the big overhaul to taxes that the House has proposed. This is Lucian Smith here on the Gallo Radio Show on SuperTalk, Mississippi. This is Lucian Smith here on the Gallo Radio Show. Final segment here. We've got Gerard Gibert, who's written, again, just a fantastic explainer about HB1. If you don't have time to figure out what this is all about, go to supertalk.fm and read this. Gerard, so how does this impact, how does this affect different, or are there any other major provisions of the bill you want to talk before we talk about how it affects people?
The only other major provision that doesn't affect people is that right now, as you well know, the net proceeds of the Mississippi Lottery Corporation, the first $80 million per year of proceeds generated, are transferred to the State Highway Fund. That would change under this legislation. No secret, PERS has a financial problem. It is facing headwinds, something we've talked about. This bill would change that so that the first $100 million of net proceeds from the lottery would go to the PERS fund.
Okay.
And the excess would be split between the Education Enhancement Fund and the Multimodal Transportation Fund. I can't remember the exact name of that fund. I actually did, and you'll see in the article, links to files that you can scroll and see the effect of typical taxpayer scenarios. And it uses 2024 as a baseline because most people are accustomed and familiar with their tax burden today. And then it distributes that all the way out to 2037, accounting for the phase-out of the income tax, the reduction of the sales tax on groceries, and it compares 24 to those years and each year to its preceding year. I took, for example, Lucian, a single filer that makes $25,000 a year, spends $6,000 on groceries, $4,000 on non-groceries, $1,000 on fuel. Now, I understand everybody's got a different situation.
Right.
I just estimated here. I think it's reasonable. So in 2026, it's a net benefit versus 24 of $22 for the year. And then it escalates to $76 in 27, $108 and 28, all the way to $385 net gain in 37. Now, I did a couple of cases of taxpayers who were eligible for SNAP benefits because SNAP food stamps are not subject to sales taxes. However, so they don't get the benefit of the decrease of the grocery tax. That's why I incorporated that in the model.
That's really interesting.
However, looking at the amount of SNAP benefits, I don't think an individual or family, depending on your situation, because the benefits are based on the number in the household, could survive from a groceries perspective off of those benefits. So I said, they're going to spend a little more money on groceries, and I factored that into the model.
So they probably do have tax liability, even though a lot of it's tax-free because it's SNAP.
That's right. But they would have assuming they're paying, in the model, I give you an example, $27,495 for a head of family and a child. Say a single mom with a kid. $27,495. Why did I pick that number? That's the maximum amount of income that situation, two people in the household can have to be eligible for SNAP.
Okay.
Yeah. So, and they spend, I said, $200 extra a month on groceries over and above the SNAP, $2,400, $4,000 on non-groceries, $1,200 on fuel. Now, to that particular situation, they have a net increase in their taxes of $16.
Okay.
For the year, $13.27, and then as the grocery tax continues to phase down, a net gain of $6.28. Now,
but the increase would be because of the increase in sales tax on non-grocery items
and fuel.
Correct. And fuel. Okay.
So I figured that in there. So one of the things that makes tax reform, especially reduction of income taxes or any taxes in Mississippi difficult, Lucian, is that we already have low taxes.
Right. That's a good point.
We already have. So retired folks, they're the ones that you'll hear the most about. You probably got text on your tax line about it from retired. So I did a retired person making $45,000 a year. Why'd I choose that? A single individual. That's the Mississippi's per capita income. $45,000.
Okay.
I say they spend $8,000 on groceries, $8,000 on non-groceries, $100 a month, $1,200 on fuel. To them in 26, a net increase in their overall tax burden of $50. In 27, $84, 28, 68, 52. Really, it's 2033 before they see any benefit, and that's $12.
So let me ask you this. We've only got about 30 seconds until the bumper, but do you think, clearly this isn't going to be the final form of tax reform if they're able to agree.
Yeah.
But do you think this is good legislation? If it passed in its current form, would Governor Gerard Gibert sign this into law?
I'm generally in favor of eliminating the income tax if it's done in a responsible and prudent fashion. I am concerned about some additional spending burden the state may be looking at because the Trump administration is cutting costs, and a lot of those costs are going to the states, and they're going to trickle down. And so I get into that in the article. I'm worried about Medicaid. I'm not talking about Medicaid expansion.
You're talking about current Medicaid. Y'all, this has been Lucian Smith in for here on the Gallo Radio Show on SuperTalk Mississippi. I'd encourage you, go look up this article at supertalk.fm, and to learn more about what's going on with taxes and generally, make sure to tune in 10 o'clock to 1 o'clock every day to listen to Gerard Gibert on middays. Y'all have a good day. Coming up next is Fox News, followed by SuperTalk Mississippi News.